Hey traders, it's Ryan here from the Private Banker. I'm just going to do a quick update for crude oil and just going to touch base mildly on the SP500 also. Seen some pretty big sort of shifts in crude. I mean, I haven't really had time to document this with some videos, and I've been slacking a bit on the posting on the forum, but we just see a decent bottom put in. I mean, there was a good this whole process was just a big bottoming process, and I mean, we already sort of knew that we sort of hit that higher time frame support level. I mean, we came in off the year and we punched below to the 2014 low, and we just auctioned down to this key support level, this $44 a barrel, and obviously if this sort of blasted through, then the next sort of level was this 33.20. And if we do look at the TPOs as well, I mean, did highlight this all in real time, and we had that sort of that lower balance from 2009, and we broke out into the uptrend in 2009, and we basically just come back and revisited the mean of that lower balance from 2009, and we found support here now. So I mean, this is just short-term support. I mean, we still got quite a long way to go. Yeah, obviously we've got like a macro time frame rebalance now, and that just doesn't happen overnight. I mean, we finally broke that one time frame on the weekly, and we saw 18 weeks I believe, one time framing down, so just lower highs for 18 weeks, and we came in this week now, and we broke that one time frame in behaviour. So you can see the potential bracketing range I've got in play at the minute, depending on how we close this week out. I'll adjust this, but I don't expect the market just to reverse here and just auction back to $60 and $80 a barrel. It potentially could, but that's just not the expectation for the moment. We've clearly found support. We're just going to see some a two-way auctioning process happen on the higher time frames now, as the perception of price is established on them higher time frames. I mean, there's no reason why we can't also break down further here and test deeper. I mean, we're only in February. There's quite a lot of things to consider at the moment. Obviously with the US dollar, I mean, US dollar has been phenomenal. I mean, we've seen it break out into a bull market. I mean, we've just seen it take out all these highs, and we're clearly in an uptrend here, and this has been a very large move away from this current balance, and we're clearly holding offer above this key level when we're heading to that 100 level now. So I mean, there's a 100 level, we've got 2003 highs and some other highs that I've marked up. So I mean, if this continues to rally and we continue to see strength in the US dollar, then that it seems to be at the moment, then this is going to continue to put pressure on commodities. I mean, gold's a bit of a funny market anyway. I mean, there's a lot of hedging that goes on in gold with inflation, and just the way the world sort of works is gold is a hedging market, where oil was a physical product that we use. I mean, there's not a lot of use for gold. I mean, yeah, there's gold for there's usage for jewelry, and then they use gold in like iPhones and some electrical products, but other than that, I mean, it's not a very widely used commodity, where oil is a used commodity. We use oil for everything. I mean, we use oil for producing plastic, for farming, for running our cars, for aeroplanes. I mean, the use for oil is just endless. So I mean, obviously there's just two complete different markets, but regardless, the US dollar will put pressure on commodities, and it will hold the price of oil down. I would have thought over a longer period of time, if we continue to see these higher prices on the US dollar. So we just have to see how that all plays out. I mean, I'm not sort of speculating and giving anyone advice. I'm just my own sort of thoughts at the moment. But anyway, regardless, like I said, we've seen that bottoming process happen in oil, and still seeing this one time framing on the month, and you can see sort of how long it took to after this crash in 2009. You can sort of see that there was a 1, 2, 3, 4, 5. There's like a 5-6 month transition here. I mean, we've seen that the first month close out bullish, and we're still one time framing. So I would think that we'd see a same sort of process in crude here now. And as I said, there's no reason why we can't come down and test back below that 43.80. I mean, before after we put that bottom in, I mean, the market came down and pretty much wiped all of these any weak sort of buyers out here before it finally broke out higher. But so again, just have to be very patient and just read the auction process as it unfolds through each time frame. But I mean, we've clearly seen like I said, a bottoming process unfold here on crude. I mean, if we sort of look at it from a weekly perspective, and I kind of zoom out a bit, I mean, we sort of see that value migration sort of to get cut off here, and then we start to see overlapping value areas. So there was obviously a buy and demand here, and higher time frame traders are starting to agree on prices around this area, and we start to see this two-way trade come into the market. And finally we see that last bottom come in last week, and we see the market try to break out, and we just see very intensive absorption on this day. And then since then we've just basically seen a big short squeeze, and anybody who got short here now is starting to get a little bit worried and maybe adjusting their risk, and we're starting to see that in the current price action. So I mean, when traders start to chase the market, I mean, and the real greed and fear and the volatility picks up, as we see when this market broke down in June last year, in 2014. I mean, once we started to break out, it just got dumped very fast, because there's a lot of people that got caught holding positions that they shouldn't have had. So anyway, I'll continue to go on here. I can't really go into this in great detail, but I mean, there were some clues that this was going to happen. I mean, on these days here, I mean, everyone was saying that we're going to break down and the market's going to $30 a barrel. And if the days that came into this day after we see this big pop, you can see the accumulation coming in. I mean, we weren't seeing the value migration that we were seeing. We wasn't seeing elongation. We were seeing two-way trade. I mean, if you look at these profiles, two-way trade, two-way trade, two-way trade. Well, there's a double distribution trend day. Two-way trade again, and we're not seeing price expiration. We're not seeing a dominated one time frame in the market, and so that was telling us that obviously from a very basic perspective that there was higher time frame participants accumulating inventory in this area. And we came into this day, and we made the run for that low. I mean, this day here looked like a good low, so the market came in, we spiked down low. There's a lot of inventory that came in on this day. There was a couple good 1,000 prints to them on the limit buy side, so there were passive buyers absorbing sellers. And then in this day here, we opened up in fair value, and we basically just see a big inventory grab. The market ran down, they took any weak buyers out of the market, and we see some more accumulation. Next day we come in, and we just see this huge liquidation come into the market. I mean, I was posting on this on Friday last week. I mean, we came in, we see that responsive buy-in, and we started to see that clear P shape. See if I can split this out. That clear P shape in the market. And when we see this P shape happening, especially after what we've seen, we know that these are traders caught. We know that there is short liquidation happening, and we kind of came in, and there's just that huge panic buy-in here, and you can see anybody that was selling this all the way down and accumulating short inventory, they got wiped out pretty fast here. And this is what happens. I mean, we didn't really see any strong one time frame, but there was a couple of days of one time frame until one time frame got cut out. We continued to one time frame, but as I said, we were just seeing the accumulation here, and we came in and just ripped. And anybody who, as I said, got caught short at these lower prices, they kind of felt the pain on Friday, and probably got forced to liquidate with margin calls, and the rest of it just stops getting hit. Today we came in, we opened gap up, we put a big spike higher in overnight. I mean, we took out that one time frame. I mean, I believe in 1 second the market spiked up about 100 ticks and 100 ticks back down. I think that happened in the Globex last night. So we just stopped just getting smashed as the one time frame got took out on the weekly, and we just sort of came back in. But we opened higher. We opened higher over the gap up, and we see this sort of spike up into the open, and with what looked like responsive buyers, and just leaving that gap. I mean, if we look at the just bear with me 2 seconds. If we look at the what happened here, I mean, we just auctioned to where is 9 o'clock? Right here. We just auctioned basically to the developing value area higher on the Globex. I mean, this is quite important. I mean, I've been referencing the RTH pit trade a lot, but I mean, today I was just sort of keeping an eye on the weekly. I mean, took a nice short here. We come back down to destination trade back to the gap fill, and then we see these responsive buyers come back up. And I mean, only sort of took a destination trade to the top of value, but it was just a very nice trade today. I mean, we opened gap up, and so the expectations were already rotational. So I mean, just got this very nice short for a gap fill, and then once the gap fill was kind of complete, and wait to see whether we're going to sort of see price get locked in and maybe potential reversion back to the previous day's value. But we held value higher. We came back in and we broke the 1 time frame in E, and there was just some nice setups here, and there's a nice setup, and we just took a destination trade from yesterday's high all the way back up to the developing value area high on the day. So I mean, I just sort of caught a nice move down and a nice move back up. So just very good rotational two-way behaviour on crude oil today, and very nice trades to be taken, and so yeah, that's just how I was looking at it. I mean, we're just holding higher value on the day, and just that rotational two-way auction process. I mean, for you guys to trade with us, I mean, you know what we look for on these days, and we came in for the gap fill, and we held higher value. I mean, very interesting to see where we go from here now. I mean, we've kind of got that open gap, and we've got that last year's low, which we've been expecting to test. So the big true colours are going to be when we come back up and test that 2014 low, and if we can find some responsive buyers to hold back in here now, or we're going to come down and continue to trade in this lower area. But the interesting thing is when we started to auction down on these days, I mean, you can see the volume sort of dropping up and then dropping off, and then counter trend auctions, and then finally we see a nice sort of reversal there. I mean, just played out very nicely from what I was looking at anyway. I mean, there was a lot of confusion on some of the sort of public social media like Twitter and Facebook and a couple of the mainstreams that I sort of look at. I mean, there was what seemed to be confusion, and I think that's just what happens in these times where it's very volatile and people sort of they don't see what's happening from a bigger picture perspective. I'm just going to quickly take a look at the S&P here, just real quick. I mean, very interesting. We've seen, like, we opened up this year, and we just basically saw a price range from this 2064 on the cash to this 1988 on the cash. So the SPX, this is the SPX, and we came in today. Let me just update this quickly because I don't know why it's not updated. There we go. Yes, we came in today, and we sort of peaked below these current lows, and we found some nice responsive buying back into range. I mean, if we look at this from that was last week's low on the SP500, and so we auctioned down, and there's just some beautiful action that unfolded here. I mean, just it was very obvious. I mean, we're either going to see two things happen here. I mean, we're either going to see a breakdown below 1988, and we're going to see aggressive sellers start hit the table, and they're going to come down and try and run the stops below this 1973, and then that could have been the potential directional breakout. But when we start to come in, we start to look at the higher time frame sort of things. I mean, we can see this quarter is very balanced. I mean, we're still seeing rotational two-way trade. We were potentially going to see a breakout here, but we just auctioned to the current distribution extreme, bell curve extreme, and we tested the LVN, and we see absorption here, and we see responsive buy-in back to the mean. So there was no change here. I mean, for change to happen, we wanted to see a nice breakdown through this 1977 with force, and then potentially volume coming in, and then value obviously getting dragged down to catch up price. And obviously the destination target is this 1910, which we've already been through if you track what we're looking at, and but that just wasn't the case. I mean, we keep popping into last year's developing value, last year's value, and multiple times we rejected it. So we've rejected it 1, 2, 3 times, obviously from a couple day round turn. But I mean, we'll most probably auction back to the quarterly, and we'll see a breakout once this value is accepted. I mean, we've tested this a good couple of times now, so if we do keep auctioning back down here, then the expectation is to break down and pull back into last year's value lower. But until that happens, obviously this two-way trade of rotation is expected. So the first thing we want to do is fade these extremes until we see breakouts with increasing volume, and we just didn't see that today. I mean, we came in and we saw that nice passive flooring capping the lows, and you can see here we just see this very fast auction away from this 4 days distribution here, and to the low. So we're either going to break out here, but that's the way the market did it. I mean, we're really going to see a complete meltdown and just leave these two periods like this. And was that good or done on good volume? And we came in, and then on time change we see responsive buying back in, and then we started to cap the value area low on the day, and we just see a very perfect mean reversion trade. back to Friday's fair value, and we see two-way trade coming into the day, and then into the close of the day we sort of see this spike higher, and that was all the way back to, as you can see, the quarterly Vwap. So very, very calculated market, the S&P. I mean, yes, the crude oil is calculated too, but it's a bit more sloppy because it doesn't have the same amount of volume piling through it like the S&P does. I mean, the S&P probably did like over 2 million contracts today. I didn't see what the S&P did today. I won't see it. I haven't got any stats, but there was a lot of volume that goes through it. I mean, at the minute crude oil is doing 400k. I mean, and the S&P is doing 4 times that. So it's just very, very calculated. And I mean, once we failed below, once we found responsive buyers back in, the sellers tried again to cap or to push it outside day, and buyers capped this. And once that that happened there, where buyers capped that previous low, I mean, the destination becomes the previous high, and what happens? We auction straight back to the previous highs. It's very, very mechanical. So it'd be interesting to see what we continue to do here on the S&P. I mean, taking a quick look at the monthly. I mean, you can see the monthly. We're just seeing this continued two-way trade, and we come down. We see an inside month. So in January. So the real extreme on the monthly is this 1972, and the high of, which is the all-time high of 2093, and we haven't seen a breakaway from last month's low, so obviously the destination now becomes the high. So we'd have to see how this continues to play out, and what happens here. But I mean, if we look at this from a TPO perspective, I mean, it's just very mechanical. We auctioned to the distribution bell curve extreme, we found responsive buyers, and we just auctioned back to the mean. So the real edge from this time frame was obviously to trade this, and once we broke down through here, then we would have started to come down and target some low levels. But again, it's very mechanical, and as we've seen a responsive buyer off of the month now, again the target becomes the high, this poor high at this 2090, until we break below this key 1970 area that I'll keep referencing. Anyway, hopefully I'll try to keep up to date on some of the recaps. Just very, very volatile active markets recently, and kind of get exhausted through the day, and just end up not doing the recaps. But anyway, I hope you all enjoy this, and wish you all the best of luck for tomorrow. Any questions as usual, do not hesitate to ask. Take care and goodbye.